G'day guys, welcome to your September property market update. I have got some seriously good information coming your way in the next 5 to 10 minutes. Now to kick things off, the Reserve Bank of Australia for the third month in a row has really done not too much with rates, which is creating a lot of confidence and finally some stability in the markets. On top of that, the Reserve Bank believes that inflation has now peaked, and if you look at some of the data, it looks like it's going to be below 5% for the 12 months moving forward. On top of this, CBA has gone on to say that household disposable income has somehow lifted. I thought they were trying to do the exact opposite of that at the moment. On top of that, salaries and wages are up, but obviously household living costs are massively up as well. Interest rates, as they said, most likely are going to remain on hold. It looks like the Reserve Bank's done enough, according to CBA, to sort of nip things in the bud. And according to CBA, inflation is now well and truly under control.
Yeah, it's insane to see how positive things are looking despite, I guess, cost of living and everything like that. But other parameters are going up in line to kind of take the burden off households. The Westpac Melbourne Consumer Sentiment Index recorded that there was a rise by 0.6% in the time to buy a dwelling index. And basically over 65% of consumers expect that prices will rise over the next 12 months, which is really good to see people saying some positive things about the market finally.
You know, what's interesting is that sentiment for the last 12 months since February 2022 has pretty much been at the lowest level since the last GFC, even lower than COVID. So it's great to hear that that's jumped by less than 1%. It's good to see that all of our great work out there is, as always, lagging well behind. But yeah, like Australian Property Investor said the same thing on another report, that 71% of investors expect prices to rise in the next 12 months. So really there's only two things that drive real estate price growth, and everyone will tell you there's 1,000 things, but it's two. One is how easy it is to access credit. When it's easy, prices go up. When it's hard, prices go down. And the second is confidence, like how you and I are feeling about the future. If we've got a positive outlook of what's to come, prices spray up. If we've got a negative, they normally sit flat or even decline like we've seen in the last 12 months. What else was CoreLogic saying though?
So a few interesting things. National home values rose by 2.9% in the 3 months leading up to July, but Brisbane's leading the way in that growth, with house prices up by 1.5%. In addition to that sort of growth we're seeing in Brisbane and nationally, the vendor discount is actually up from where it was about 12 months ago. It's a good indication that sellers aren't having to reduce their expectations of selling as high as they were, because there's probably a little bit more competition out there.
Yeah, so I saw the same thing from Australian Property Investor. You know, supply is extremely limited right now. In fact, it's like significantly down in most of Australia's capital cities. And there's extremely strong demand. So according to SQM, for the first time in about 18 months, we're starting to feel that FOMO again. I'm certainly noticing it on a week-to-week basis. Hey, Snowy, you're back again. Always comes back as soon as we start recording. But, you know, we're noticing many more people showing up to open homes. Last sort of February to December, it was pretty much us. Then about 5 to 10 people started to rock up to open homes again with us in January till about June. And since June, we're seeing on some properties anywhere between 10 and 60 groups. Again, instead of 1 or 2 offers on properties and the property taking a week to sell, there could be 5 to 15 offers on every property now, and properties are selling in 1 to sort of 3 days from when they come online. So things are definitely starting to heat up. I personally love the next phase that we're going to go through. So what normally happens after a decline, and this is the third decline of more than 10% that you and I have seen in the last 7 years, is the first wave of investors like you guys that are a little bit, you know, ahead of the game because of content like this, come in over the next 9 months. The 9-month period started about 3 weeks ago. And then once all of you guys have gone in there and bought some cool stuff, the next wave of first and second time buyers comes through. And that wave lasts about a year. And then we get people coming in over the top and just paying exorbitant prices. And by that point, people like us are obviously moving into the next best suburbs that have yet to go. So it's going to be an incredible ride based on what I'm seeing at the moment, which is about a 1 to 2% increase in prices per month in all of the capital cities. we could be setting up for a 10% plus growth year in many of Australia's capitals in 2024.
Yeah, definitely from a boots on the ground perspective, Brisbane's very, very competitive right now. You wouldn't think it with what's out there in the media, but finally things are looking really, really positive, especially in some of the undervalued suburbs that we're buying in. If you're in that 600 to 700K budget range, everything is extremely competitive. And overall, Brisbane looks quite good in terms of the Australian averages. So Hannah Galloway's got the days on market's 36 days, whereas Brisbane's only sitting at 31 days. So it's a little bit ahead of the national averages, which is great to see. And we're definitely feeling that.
You know, I think now, according to CoreLogic, we've just had our 6 months in a row of August of prices increasing, which builds confidence. We've had 3 months, like I mentioned before, of no interest rate movement, which is what a lot of us were looking for. Again, houses are massively outperforming units in all of Australia's capital cities and major regional markets in the last 6 months. Generally, houses lead the way out of the recovery. But like we've talked about time and time again, houses are definitely the preference, or high quality townhouses in the right areas, mainly because in the last 30 years, according to CoreLogic, they've outperformed the units by over 125%, which is significant.
On top of that, we've got the rental market is absolutely booming at the moment. It's gone up 16.1% across the combined capital cities over the last 12 months. The rental market's really, really tightening, and here in Brisbane, we're seeing a lot of competition at those open homes, properties tenanting quite quickly, and those vacancy rates are still sitting at an all-time low.
You know, in terms of what we could expect, guys, we're going to see a construction boom coming next. We're going to see a massive infrastructure boom coming next. Most likely for the rest of this cycle, we'll see commodity prices sitting at very, very high, if not all-time levels. According to Phil Anderson, Ackle Paddle, we should see stock markets around the world and different asset classes do extremely well. And then the most undervalued markets around the world and in Australia, like your Brisbanes, like your Perths, etc., have a lot of potential for now until the top of the peak. So what Phil, in his latest article to me, or latest report to me, was basically saying is the next phase of the cycle is what we call easy credit. So since 2015 until now, for any of you guys that have tried to borrow money from the banks, it's kind of like taking every single thing that you could possibly give them, plus a bit of your firstborn's blood type vibe. It's been absolutely brutal. It's still been very, very difficult to get money. But at some point very, very soon, the banks are going to go nuts. They're going to be trying to get all of our business. The lending criteria is going to be driven by them versus the Australian government to kick things back into gear. And we'll also, on top of that, see a massive increase in construction. According to Phil, the cycle's very, very, very much on track right now, and things are looking very, very, very positive for the next 3 years for what is going to be one of the biggest asset booms in history, according to him. So I'm feeling very comfortable. To be honest with you, I've been feeling comfortable for the last 6 years since I found Phil's work. For those of you interested in this sort of stuff, his business partner, Akil, just published a book that came out in the last month or so called The Secret Wealth Advantage, which looks at hundreds of years of history and how you can safely trade cycles, invest in property, invest in stocks at different stages, and minimize your damage in markets like GFCs, as well as take advantage of markets like the one we're in right now. If you're a history geek like me and you just love this stuff, Phil also wrote another book looking at hundreds of years of American history, the booms and busts, called The Secret Life of Real Estate and Banking. I think moving forward from here, all of us are just going to continue to get more and more and more confidence as the months go by. What I would recommend is for any of you that haven't or aren't seriously thinking about taking action in the next couple of years, now's the time to begin looking at it, because 3 years from now, you'll be looking back at this period and videos like this one and going, fuck, we really missed a big opportunity there. In property and potentially stocks as well.
Awesome. Well, I'm excited. It's looking like things are heading in the right direction. If you haven't already done so, give us a thumbs up and subscribe to the channel, and we'll try and give you updates like this every month and see how things pan out.
Woo! That's a wrap.
That's a wrap.
That's cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. That's so nice, eh? Oh.